Good afternoon. It's 1 o'clock on a Friday, the 30th of October. This is the Wall Street Crossover Show with Darren Sinden, who's the market commentator for Admiral Markets, sponsors of this program. Good afternoon.
Afternoon, Zach.
Right, a week of people not doing as much as they should have done.
No, that's probably a very good summary. It seems to have whizzed by. We've been moving from sort of one key central bank meeting to another over the last 7 days, and yet we've come away with absolutely no action whatsoever. Although much has perhaps changed in terms of the language and stance of the banks in question. So
right, well, let's have a look at what they did or did not say.
Okay, well, there were high hopes of action from the Bank of Japan today. I was certainly amongst the people that thought that this would be the point at which they extended or adjusted their current QE plans. But in fact, they did nothing. They voted 8-1 to leave things alone. There were some comments around the meeting, though, that suggested that they could do something later on. I think that there were comments like there was no limit to what they could actually do in terms of QE. I think Mr. Kuroda said that. So the door's open to a move later. Whether that's in November, December or January, we'll have to wait and see.
Well, there's no limit to what they can do in life, but apparently on monetary policy they've run out of ammunition. I think that's the problem.
Well, quite possibly. And then we come back into the European session proper. A couple of data points amongst the many there were this morning. First of all, German retail sales for September. We look at the year-on-year number here. They were better than the prior read. They came in at 3.4%. That's up from the prior read of 2.1%, but below the forecast of plus 4.2%. So German consumers do seem to be still spending, but perhaps at a slower rate than the market had anticipated. And then we had the consumer price index for October for the Eurozone as a whole, so one of the many measures of inflation that we watch these days. This is the year-on-year number, came in absolutely flatlining, plus 0.0%. That was bang in line with the forecast of plus 0.0% and a smidgen better than the previous read of minus 0.1%. If you look at the core number, as some people do, although it always strikes me that's a bit of curve fitting really, then that was slightly better again as well. But still, we're just fluctuating around the
we're nowhere, are we?
No, absolutely not. And then in terms of data for next week, quite a busy calendar. So we start with some PMI data, non-manufacturing data for October coming out of China on Sunday, and then manufacturing PMI data on Monday morning, and then it's PMIs again on Monday from the Eurozone, manufacturing PMIs there, and indeed in the UK, both data sets of data for October. Moving forward to Wednesday, we've got producer price index numbers for September from the Eurozone, and then Eurozone-wide retail sales figures for September again on Thursday. And in both of those cases, I suggest you look at the year-on-year numbers rather than the month-on-month flavours.
Okay, well, let's go on to the European movers.
Okay, quite a busy session actually news-wise today in European equities. I've just picked on a couple that caught my eye. First of all, IAG, the International Airlines Group, the owners of
British Airways and Iberia.
Yes, and a couple of other smaller airlines as well these days. Anyway, numbers today, and they were good. I have to admit that they did look pretty good, but they're trading down 3.7% lower at 5.75 pence. And I think the truth is that despite the good numbers and their positive outlook for the full year, the market was expecting more from the group. They like to complete their takeover of Aer Lingus, and I think they were hoping for something more substantial, more positive benefits from that, and it hasn't been delivered. So we're off 3.77%.
48% rise in profit seems to be quite chunky to me.
Yeah, I mean, I thought they deserved better, but it just shows you how hard it is to please the market these days. But a company that did manage to please the market was BNP Paribas. That's BNP in France. For the second quarter in a row, they produced good numbers. You may remember last time round they had an excellent performance from their fixed income trading and investment banking division. This time they managed to post a 15% rise in Q3 net profits, mostly helped by a strong retail banking performance. So it looks like most areas of the bank are firing on cylinders. Yeah, so up they go. Right,
off to the M&A rumours and movers.
Okay. We find ourselves back in the telecom sector. Well, you can't seem to leave it alone, really. Telecom Italia is the stock in question. That's ticker TIT. in Italy, or TI for the US listed line, €1.30, up around 2.7%. The news is that French billionaire Xavier Niel has announced an 11% stake in the troubled Italian telecoms company. The news broke late yesterday afternoon and the shares rose 11% as a result. Xavier Niel is the founder of the French broadband provider Iliad, and this investment in Telecom Italia makes him the second largest shareholder after fellow French men and company, Vivendi SA, controlled by Vincent Bellor, of course. The French interest in the company now, and this is Telecom Italia, amounts to 30%. Interesting to note that the Italian authorities are trying to test if the two people are acting in concert, because if they are, they've got to make a mandatory bid. Just to give you a bit of background on Telecom Italia, it is Italy's largest mobile and broadband carrier, and interestingly the group also controls the second largest mobile carrier in Brazil. However, it's been under pressure for some considerable time, and the management's got to try and reduce a debt pile of around 27 billion euros, try and sell off some assets. Just to give you a flavour of where the company is, current valuation gives it a market cap of around 23 billion euros. Of course, this is the latest in a series of moves in this telecom and cable sector by French businessmen. We talked a lot about Altice and their exploits in the US. Xavier Niel has also been active and recently bought Orange Switzerland for himself rather than for his company for around $2.9 billion. And Iliad, his business in France, has been seen as a very disruptive force in the French telco market. So he's obviously hoping to make a name for himself elsewhere as well.
With that market cap and that debt, the Italian authorities should probably forget about whether they're acting in concert or not and just say yes to the money. Right, US data points.
Okay, a relatively slow day today, but we have got Chicago PMI Purchasing Managers Index data out for October, forecasting a read of 49.2, slightly better than the prior read of 48.7. But just to sort of give some context here, this number's really been declining overall since it peaked at a high of 66.2 back in October last year. And then we can't get away from the central bankers at the moment. Two Fed governors speaking separately today in the States. San Francisco's John Williams, and then the Kansas City Fed Chair Esther George is also speaking. John Williams will speak around 1400 GMT, and Esther George around 1525 GMT. And then looking forward to next week, we've got ISM manufacturing data on Monday to look forward to. Tuesday is a thin day, but there is factory orders data out then. Thursday, we've got weekly jobless claims, and of course they take on much more importance in a week that's bookended by the non-farm payrolls, which we'll see on Friday. So, and of course the Fed said on Wednesday that things were data dependent, so people will be paying close attention to that number. Right,
okay, well, let's go to the US pre-market movers and levels.
Okay, we've got Lending Club first of all, one of these peer-to-peer lending businesses. LC's the ticker in the States. We looked at this one before, $14.90 trading pre-market, up around 9.4%, and they posted a smashing beat on earnings per share in their numbers last night. Basically beat by 50%, posting earnings per share of 4 cents as opposed to the forecast of just 2. And then Electronic Arts, the well-known gaming software group, ticker EA in the US, $74.02, down around 2.68% pre-market, having initially traded higher. They also reported last night, and they did beat on both EPS and revenues and posted good guidance. The stock has traded down, however, and I think the truth about this is that they rallied $10 throughout the course of October, from sort of mid-60s to 75, and I just feel that people probably think that they've run far enough for now and are taking some profits, so they're trading a bit lower. And in terms of cash equity levels, we now look at 63.50 in the FTSE, playing 64.10. Pretty much where we started the week, to be honest. It's a similar story in the DAX. 10,800 plays 10,855. The US indices trying to hang on to their recent gains. 2070 on the downside in the S&P, plays 2095 to the upside, and obviously 2100 and the all-time high somewhere just above there. And then in the Dow, 17,680 is our downside level, and to the upside 100 points higher, 17,780 is the area to watch. Currency wise, the euro 109.68 I think is the downside level now to play on the in this one against the dollar. 110.30 to the upside, but I guess the bias is probably towards weakening given the expectation of further ECB action at Christmas time.
Well, surprisingly strong, I would say, still.
Yeah, for the moment. Aussie dollar against the US dollar, that has weakened, so 70.80 now is our support level on the downside, plays 71.20 to the upside. Dollar yen, pretty much static, a real surprise. No real movement at all. So 120.28 now on the downside, plays 120.82 to the upside, and cable ploughing its own course really. 153.10 plays 153.60 to the upside.
Right, in focus, what are we looking at?
Well, I thought we'd finish the week in the way that we started it, really, and look at the expectations of what's going to happen to US rates now after the Fed meeting on Wednesday. The question is, there are the statement really, revised expectations of a US rate rise in 2015 now, but will they endure? So after a week of central bank inaction, but one that contained plenty of hints about what may come next, how is the market now viewing the prospects of a rate rise in 2015 and beyond? And so what we've done here is plot the expectations, percentages, expectations, however we want to call it, probabilities perhaps is the best way to describe it, as they are now versus what they looked like earlier in the week. So before the Fed meeting, there was just a 6% chance in October. Obviously that didn't happen. A 35% chance was a proportion for December, and a 41% chance for January next year. And since the Fed meeting, we've seen expectations move up to 47% in December and 55% in January. We go further along the curve, and the further along you go, obviously the more expectation there is. 69% in March, 74% in April, and right out to September, where it's pretty much a done deal as far as the market's concerned at the moment at 91%. I think the key here was, though, that the Fed in its statement said that the move in December, if it came, was going to be data dependent, and we've got a couple of non-farm payrolls and some other big numbers to come before they meet again.
Well, we had the get out of jail thing was the China on the last one, and now it's the data. So presumably the data will save the Fed from having to raise rates. But it is interesting that the Japanese and the ECB seem to be. It's almost as if the Fed have told, or they colluded, and somebody said, "We're going to move in December, so you don't need to do anything." So
Possibly.
that's sort of. I think that. Maybe that's what the Japanese are thinking with that they actually believe the latest hawkish statement as well. So
yeah, well, if we get a decent farm number next week, then some people are saying that will make it a done deal for December. It'll be interesting to see how these probabilities change if that's the case.
Okay, Darren Sinden, market commentator at Admiral Markets. Thanks for that, and that's it for the Wall Street Crossover Show. We'll be back again on Monday at 1 p.m.